Hello, everybody, and welcome to iGaming Next Weekly News Live. I'm excited, Connor. Are you excited?
Jake, I can hardly contain myself. I'm nearly jumping out of my seat here. I'm so excited. I'm on my 17th coffee of the day, and we've got lots to discuss, including a big scoop that our very own Jake Evans broke earlier this week. So, yes, very
Yeah,
excited.
well, I'll tell you why I'm excited. That is because it feels like this week, for the first time in a while, nearly all the major talking points have come from the US, which is always a fun market to talk about. Like Connor says, we are going to dive right into that shortly. Um, First of all, though, I would like to say a big, huge thank you to Playson, our primary sponsors, and to Interactive and to Hub 88. And most of all, to everybody who's going to watch us today, please be aware that obviously you can comment on LinkedIn, on YouTube. You can keep the discussion going between me and Connor, and we're going to need help today because there's no Nico Janssen. So, yeah, fill in for him on the chat if you can. He'll be missed, especially for 10 and 5.
I miss him, don't you, Jake?
I do. But actually, having said that, he might make a little cameo a little bit later on in the in the live stream. So
Wouldn't
keep
that
your eyes peeled for that. um, right, I guess we can just dive straight into our first topic then. In that case, and that is with the news that Las Vegas Sands, the biggest gambling company in the world, has finally entered the online gambling space, and not in a way that perhaps people would have expected, because instead of launching, an online casino or online sports book like, MGM, Caesars, Win, Bally's, all their other big rivals have done, they've decided to go down the B2B route, um, which I'm sure you'll agree, Connor, is, that's interesting enough on its own. But when you find out that they've then chosen dealer casinos to enter, it becomes kind of even more fascinating, in my opinion, because as we know, that is a vertical that is dominated by evolution. So yeah, I guess the question on most people's lips is whether this opens up the potential for a matchup between two absolute giants of online gambling. And I think to put the size of these companies into perspective, Connor, you've done a little bit of research for us on their market caps.
Yeah, I have, and I think you framed it quite nicely there. I think there's good
Thank
reason.
you.
No, thank you. I think there's good reason that people have brought up this comparison between Sands and Evolution. Obviously, the live casino, sector is very much dominated by Evolution, but also Sands is probably one of very few companies in the space who has the size, the scale, and the balance sheet to be able to invest enough to actually compete. So, as you rightly pointed out, Jake, Las Vegas Sands is the largest gambling company worldwide by market cap. Their market cap is about $42.5 billion. And it's listed, of course, on the New York Stock Exchange. Just to put that into perspective, Flutter is in second by market cap. They've got a $36.5 billion market cap. And Evolution is the third largest gaming company in the world, with a $27.3 billion market cap. Of course, it's listed in Stockholm, not in New York. And the reason I say that Sands is one of the very few companies who might have enough kind of might and power to be able to challenge Evo is that there's a bit of a gap then between Evolution and the rest of the list. So also in the top 10, you have the likes of MGM, Aristocrats, DraftKings, Win Entertainment, Caesars, and Entain, who are all between about 10 and 20 billion in market cap. So after those big three, there's a bit of a drop off with the size of the companies that come after them. And just to give it a bit of perspective, Las Vegas Sands generated $4.1 billion in revenue in 2022, while Evolution generated 1.5 billion euros. So less than half of what Sands generated. And I think to put that further into perspective, it's worth noting that Sands generated that 4.1 billion despite being in a kind of recovery phase after a lot of its revenue obviously fell through the floor during the COVID pandemic. Whereas Evo's been on a pretty much upward trajectory ever since day one, it seems. So yes, that's the side.
Thank you, Connor.
In perspective for you.
Very nice. And a big hello to Elizabeth and to Liga, who join us in the chat. Hi, guys. And yeah, I think we've said, while it might be tempting to kind of pitch these two against each other, now they're in the same space, there is a long way to go before, if ever that becomes a reality. And there are a couple of reasons for that. And one of those, I suppose, is that Sands, even though it's a Las Vegas-based company, has Las Vegas in his name, it doesn't really operate in the US market. Whereas Evolution, obviously, is a live casino leader in that US iGaming market. And I think, Connor, you've got some numbers on the size of the overall US iGaming market for us, especially as we're still, putting things into perspective for this story.
Yes, I have. Good day for numbers. I love this stuff, you know me.
That man, Connor.
Yeah, I can't get enough. So obviously, pretty nascent in the US. I think it's fair to say there's only 5 states, I believe, that have a full kind of iGaming availability, and they are Connecticut, Michigan, New Jersey, Pennsylvania, and West Virginia. There is also some iGaming allowed in Delaware, but that's a bit of a different scenario. That's kind of all overseen by the Delaware Lottery. And Nevada has some online poker available as well, but not online casino, live dealer, and the likes. But we've got some figures from the ever reliable Eilers and Krychek Gaming. I think Big Liz in the background, our producer, has got a chart for us that we can show here to show online casino GGR over the past few years in the US. You can see that in 2020, so rapid growth, obviously over the last few years. It was basically nothing up until 2020. And we're up to about 5.3 billion in 2022, and we are expecting somewhere around $6 billion in online casino GGR in the US. Thank you, Elizabeth. So according to Eilers and Krychek, who do their online game reports, and which we use some of the data from monthly on iGamingNext.com, as you know. According to them, the theoretical win, so the amount that online casino operators can hope to generate from live casino is about 7.7% of that total. So obviously the vast majority of casino revenue comes from slots. Around 7.7% comes from live, which means that in 2022 it was probably worth something like $400 million. And in 2023, we can probably expect it to be worth something like 500 million, there or thereabouts. I just want to compare that very quickly to the UK market, which obviously is a much more mature market for online casino. And there, I don't have exactly the right statistics for this, but their slots GGR is about 75% of online casino take, compared to about 85 to 90% in the US. So I think as that market matures, we'll probably see a little bit of a higher proportion coming from live. So let's say something like 10 or 15% eventually. Anyway, all that to say that it's in very broad strokes. I don't think we're a million miles away from live dealer casino in the US becoming $1 billion vertical in the next few years. I think that's probably achievable even without the addition of new states in iGaming. But I think if we can add 2 or 3 states in the meantime, we'll be surpassing that $1 billion mark much sooner. So
yeah, and strange to think that Las Vegas Sands doesn't really account for any of that, because its business is primarily based in Asia, and we'll come on to that a bit later on. First of all, though, let's look at a few more details from the story that iGaming Next published earlier this week. And if you want to read along, by the way, there's a QR code in the top left there that you can scan. But they are, Evo comparisons attempting, but Sands are in the very, very early stages of this, and they only, in fact, set up a corporation for their digital arm last March. So that's how new this thing is. We do know that they've put together a studio in Bulgaria, in Europe, which might surprise some people, and they are hiring for quite a lot of technology and kind of supervisory developer roles in Nevada, but those job ads only went live last week. So yeah, you said nascent earlier on, and that's exactly the word for their move into this space. I think there are about 100 staff working on live casino at the moment at Las Vegas Sands, and the plan is to get the vertical live by Q1 2024, by which time they will have hoped to have signed a pretty major operator as a client, you would imagine. I teased earlier, Connor, a little cameo from Nico, and we've got a screenshot here. I'm hoping Elizabeth has got her fingers on the buttons today, with a LinkedIn comment that he made earlier in the week, because he was one of those guys that was eager to draw those comparisons, and whether the news of Las Vegas Sands launching live might move Evo's share price even. He said, serious and well-funded competitor is entering this space, and it will be interesting. But as research always shows, competition keeps you in condition, which is a great phrase. And I think he's alluding to the fact there that Evolution, if possible, might even have an even more kind of relentless focus on operations now that they've got a potential challenger. Although we should say they already have challengers today, very real challengers, in Playtech, Authentic Gaming, On-Air Entertainment, State Logic. All these guys are in live, but not at quite the same levels. Whereas Sands, as we know, is basically a whole different business segment, because they're almost fully focused on land-based integrated resorts over in Asia. So Connor, what can you tell us about those, kind of in terms of how the Las Vegas Sands business looks today?
Yeah, well, let's look at the revenue from 2022 in order to do that. That gives us a useful comparison because it's a full year. So I mentioned earlier there was 4.1 billion, sorry, in overall revenue for Las Vegas Sands. 2.6 billion of that revenue was casino revenue, that is to say gaming revenue. So it operates 6 separate resorts. So the Sands Macau was the smallest one last year by revenue, generating $65 million. The Parisian Macau was much better, $188 million. The Plaza and Four Seasons Macau generated just over 300 million. The Londoner Macau, 350 million. And the Venetian Macau, Sands' biggest property in Macau, generated $682 million. All those figures kind of pale in comparison to Sands' jewel in the crown, which is the Marina Bay Sands in Singapore, which generated something like $2.5 billion last year. So that's more than half of Sands' overall revenue. It's obviously hugely reliant on this one property, and it's a very impressive property too. I've never been, but we've all seen the pictures of it and the rooftop swimming.
Yeah, it's basically a cruise ship on top of 2 tower blocks, isn't it, with the infinity pool and everything else?
3 tower blocks, yeah, it looks great. So you can see why that's a kind of world-renowned property, and yeah, obviously the biggest driver of revenue for Sands. But for me, that kind of shows that these are the numbers that we're dealing with. We're talking about, from each property, which you could kind of consider to be separate business segments, we're talking about hundreds of millions in revenue every year at the very least. So from my perspective, it's only going to be worth Sands' time of going into live casino if they can kind of scale it up to match up with those kinds of revenue figures. Do you know what I mean?
Yeah, and this is the interesting part. I think people are rightly skeptical that they'll be able to compete with Evo. And we saw in those LinkedIn screenshots, Carolina Pelkey said, it's going to be some time before we can even consider comparing apples with apples. And I think she's right. And I was speaking to her recently, and she was kind of saying that, for somebody to seriously challenge Evo, her money would be on a privately owned company that basically just has billions to spend without being kind of beholden to their shareholders. Because with Sands, the big question with them is whether they're going to kind of take this slow and steady and see it as an add-on to their core Asia business, or whether they are going to use their insane balance sheet, all those things you talked about, Connor, and their contacts to sort of throw caution to the wind and really try and compete toe to toe. But I personally, I also think that looks unlikely, having spoken to them directly, because we know they're not going to get into any unregulated or even grey markets with Live Dealer. As one of the biggest US listed companies, they have to be, super careful around that. And so I think Evolution has a fairly obvious advantage in that respect, as I think their share of revenue from unregulated markets is actually about 60%. So yeah, it really is an apples and pears comparison at the moment.
Yeah, I think you've made a couple of interesting points there. The one was the fact that Sands is in some respect beholden to its shareholders, which of course all publicly owned companies are. But I think, having listened into a few of the earnings calls and the analyst questions from Sands' last few financial reports, I think investors have been waiting now and expecting some move into the online space. And I think that this, by doing it in a B2B sense, is probably going to be well received. I say probably. Shares are up 6.5% over the last 5 days since that news broke. So shareholders have, investors generally have responded quite positively, I would say.
Yeah. Yeah, exactly. And I think maybe this idea they're going to invest unlimited resources is unlikely. But I also think, the idea that they're going to kind of half-arse it, a bit like they did with some of their earlier B2B online investments, is also misguided. I think they've been, incredibly patient, and it's not like they've decided to go into B2B Live Dealer on a whim. So I think they'll commit as many resources as kind of make financial sense for them in the position they're in now, probably in European markets to begin with, because as we know, they don't have a US studio. And you said you tuned into recent earnings calls, and I absolutely love this quote from Sands CEO Bob Goldstein, who said, it hasn't been a bad idea to wait for the last 6 to 8 months to see how this all shakes out, as there's been a lot of blood spilt, which is awesome language. And he's obviously referring there to everyone rushing into online gambling post-PASPA and paying ludicrous amounts, and seeing companies like Bally's, realize that they'd made some serious mistakes and they're only just having to correct them now, really. Whereas Sands was in the fortunate position of having enough to kind of wait and watch. And this is the strategy that they've decided on. They haven't done that overnight.
Yeah, and I think I pulled out some figures earlier just to kind of pick up on what you were saying, though. So the likes of Caesars had in Q1 2023, Caesars had what you could call quite an amazing quarter in terms of digital and online revenue, because they only lost $4 million as compared to Q1 2022, the year before, when they lost $554 million in their online segment. So the investment has been absolutely massive. The same goes for BetMGM, which is now expected to be contribution positive for MGM by the second half of this year. But they made an EBITDA loss of $440 million in 2022. So obviously the investment has been huge. And one thing I will mention, and something I would encourage our viewers to go and watch if they haven't, at iGaming Next New York City last year, 2022, Todd Householder, of course, the online live casino kingpin that he is, probably the most knowledgeable guy in live casino anywhere in the world. He gave us a presentation at New York about just the absolute complexity of running an operation like this, of simultaneously live streaming high quality video feeds in real time to hundreds of thousands or millions of devices and making it work on mobile and on desktop and on tablet and on low latency feeds and when people's internet connection is not good enough, adjusting the quality. And I think one of the things he said about it was that just these systems just want to break all the time because they're so complex. Any tiny thing you get wrong, the whole thing's going to fall down. So it's a huge task. It's going to cost a fortune. I'm sure Sands have been looking into this for a long time. But I wonder if there'll be any tech acquisitions. I'm on a bit of a tangent now. I wonder if there'll be any tech acquisitions in the meantime to help empower this offering. Who knows?
Yeah, I think you're right, though. It ain't easy, and not anybody can do it. And I don't want to move ahead from this story prematurely, but I think there was another news story today about live casino that can maybe open up this discussion even wider. And that was the news that Bally's Corporation has entered into a strategic partnership with Stake Logic, which is another live casino provider. For our listeners who maybe aren't as familiar, they're a Dutch company and they have 2 live casino studios at the moment, one in the Netherlands and one in Malta. So this story sort of sent me down the rabbit hole a little bit of live casino regulation in the US, because I was sure, like you are, Connor, that you needed a studio in the US to be able to offer live dealer as a product over there. So we did some digging on this, and the Bally's deal today basically covers the state of Rhode Island, which you might have missed last month. Basically paved the way for online casino regulation, slots, table games, with a new iGaming bill that looks like it's going to come into force in April next year. But Bally's is basically in the fortunate position of managing both of the state's physical land-based casinos. Mm-hmm. And the Rhode Island bill means that players can access live dealer games at these casinos, but from their computers and smartphones. So basically online. So I thought that was a loophole. But as it turns out, Bally's is still going to build a new studio in the state with software and kind of tech support from Stake Logic, who are kind of a strategic partner in this venture, having obviously done it before, and we've seen Bally's maybe try and do things before that they weren't experts in, online sports betting, that really pushed them back a few steps, and now they've signed a long-term partnership with Canby. So maybe this is an example of them wanting to do it right with guys that have been there and done that from the very beginning.
Yeah, I would say you've probably hit the nail on the head there. But what an unusual setup that you can play online casino, but only if you're inside a land-based casino. It seems wild, doesn't it?
Yeah, I think it's similar to the model used by Evolution and Authentic Gaming in Connecticut, where they can basically stream it from a studio inside of the land-based casinos there. Mm-hmm. That they've got partnerships with. I don't know if I'm 100% correct on that. Somebody in the comments might know better. But as you alluded to, building studios is ridiculously complicated, expensive, everything else, and then keeping those operations running is even more difficult than that. And I think Evolution has, I think it's 4 or 5 studios in North America. I think one of those is in Canada. And nobody else really has close to that. And Sands will be starting life, as a live dealer provider in the States, at least with 0. So, yeah.
Yeah, and if you look actually at Evolution's client list in the US, you've got BetMGM, DraftKings, Caesars, and FanDuel. So that's 90% of the market by GGR right there. And then you've got Golden Nugget and probably a few others. At least FanDuel has agreed to have Evolution as its sole provider of live dealer table games, which means no one else can get in on that action. So, yes, I think, maybe one day we'll see. As you said, Sam's probably not going to be able to enter the US market from a studio in, where did you say? Bulgaria?
Yeah, Sofia.
Yes, probably not. But then maybe in the future they'll look to. But they would really need, given that Evolution's providing live casino to pretty much 95% of the market by GGR, they'd really need to steal some of that market share. And obviously this is going to be conjecture, but I wonder if you can think of anything that's really missing in the live casino market. What do we think Sands is going to try and do differently or try and do better compared to the likes of Evolution?
Yeah, I don't know. I don't know the answer to that. It's a good question, but I think that's why in my conversations with some people, they're already betting that they'll maybe burn through 50 million, 100 million, which is pocket change to them, and then just kind of call it quits. It'll be interesting to see how this pans out. But with all that Asian retail revenue that they've got, which isn't even back to pre-COVID levels yet, I think the central question is basically just, is it worth it? Yeah, we'll see.
Yeah, I think it's Sen's way of trying to get a slice of the pie. And even though, as we've said, live casino is really expensive, I think there's an argument that this is going to be a relatively easy win as compared to launching a B2C online brand, which carries a whole host of totally different costs when you think about marketing and the likes.
And they can't just stand still either, can they? That's the other thing. Like, you can't really do that as a public company. You have to have something that's a slightly compelling story, and it'll be really interesting to see what analysts, investors are asking the management team in that Q2 call, which should be coming up in August, possibly. I don't think we've got a date for it yet. But anyway, stay tuned to iGaming Next, and you'll find out all about that as and when it does happen.
You certainly no, it says 19th of July. It's next week.
Oh, is it? What, for Sands? Okay, good.
Yes.
Nice. Right. Moving on, Connor, to another massive US company that we like talking about in DraftKings. And we covered them, all too often when things weren't going particularly well. So I think it's only fair to give them some limelight now that they are. And DraftKings has been back in the news this week for a couple of reasons. The first being that the stock reached a 52-week high of nearly $29 per share after a recent bump this week. And our friends at Eilers and Krychek point out that DraftKings stock is up 161% since the start of this year. And that is in part due to improving fundamentals on things like GGR share, handle share, hold rate. And Connor, on the topic of handle, I think DraftKings pulled off a bit of a victory last month, and you've got some color on that for us.
Yeah, I knew that was a buy when it was like $11 last year. I thought
I remember you saying, actually, we should run back through the live streams and
buy that now. But anyway, I didn't. I don't have any stocks or shares, sadly. But yeah, I just had a feeling it won't dip under 10. $10 is going to be the absolute cutoff point. It's not going to go any lower than that. And look at us now, nearly $30 a share. So could have nearly.
You'd be laughing. You'd be investing in iGaming Next, I think.
Yeah, if I'd bought one,
As an external investor,
I'd bought one share, I'd have been nearly $20 up by now. So anyway, yes, that's that's enough kicking myself for not believing in my own judgment at the time. Anyway, you're right. DraftKings had a bit of a bumper month in June, especially in the New York market, a highly competitive market, as we know, and one that accounts for a large proportion of US betting volume. So DraftKings handled something like 42% of all the mobile bets in the state in June, which totaled $488.5 million. That's 81% ahead of how many bets it handled in June 2022. Why is that significant? Well, it's significant because I believe for the first month ever, DraftKings has overtaken FanDuel, which was the previous market leader, after Caesars had a few months in the lead in the very early days of the market, but that quickly evaporated. So FanDuel had 36% of market share by handle compared to 42% for DraftKings. So it was well ahead by handle because FanDuel had 418 million compared to 488 million for DraftKings. However, there is a caveat, and I think this speaks to FanDuel and Flutter generally's kind of keen focus on things like sportsbook margin. We know they target a margin of 12%, and I think they're quite successful in achieving that there or thereabouts. So despite its slightly lower handle, FanDuel did maintain the lead in terms of GGR. So FanDuel generated 47 million in GGR, and DraftKings, although it had a higher handle, generated 37 million. So we're not opening the Veuve Clicquot champagne just yet for DraftKings, but certainly a positive development.
Yeah, exactly. And I think again, DraftKings is not going to report until early August, but the positive sentiment surrounding the stock has kind of come from analyst predictions, and there's a consensus among 27 analysts that DraftKings is a buy. You could have told them that, Connor.
No, I would have told them when it was $11. When it was now 27. Let's see.
Yeah, it's easy now. Anybody could do that job.
Let's see.
But they're offering, they're offering a 12-month price target projected at an average of nearly $29, with a high estimate of $39, which I think one of which came from Oppenheimer analyst Jed Kelly. And he used that kind of handle advantage in New York as good rationale for that. And we've got a tweet to show you, I think, from Mr. Jason Robbins this week, who is in fighting mood. As usual, he says, as a leader in sports entertainment, DraftKings welcomes competition. Competition forces everyone to keep up or get left behind. We prefer to be out in the lead. Which goes back to what Nico was saying. So Nico and Jason Robbins, two peas in a pod there. And if I was a betting man, which I am occasionally, I would say he's talking about fanatics there, Connor. Is that what you got from reading between the lines?
I actually kind of skimmed over that tweet and spent a lot more time reading the replies. I don't know. Maybe it's not my place to go airing people's grievances, who I don't know who they are, but I would suggest readers go and look at the replies, because they were quite one note from, what would you say, slightly disgruntled DraftKings customers, it seems. But yes, I suppose the whole fanatics situation. Well, what can you say about that? That was pretty fun for a minute there, wasn't it? That was a pretty exciting move in the market. That was edge of your seat stuff. And yes, certainly they, Fanatics obviously wants to be one of DraftKings' major competitors moving forward. So we'll see what happens there.
Yeah, and they've got that points bet deal over the line just about. So that could help them do that potentially. We are gaming next. We also welcome competition. We're in fighting spirits, aren't we, Connor? But I think we've come to the end of our topics for today. That was a bit of a whistle-stop tour around the US market. We hope you enjoyed the ride. Anything else to say before we log off today, Connor?
I don't think there is. No. Let's just round off by saying that we're not at all bitter about all the people who are having fun in Amsterdam this week. We hope some of you have found time to tune in from the event taking place over there. I'm quite happy here in London, actually. Thanks. So no problem at all.
Exactly. They'll probably be having a beer or two at networking drinks now, which we don't mind as long as you tune in on demand on YouTube, of course.
That's it. You can always catch these after the broadcast. Quite right.
Thanks to everybody who joined us in the chat, and a huge thank you to our main sponsors, Place and Interactive and Hub 88. And thank you to you, Connor, for joining me as always. We'll be back at the same time next week. Goodbye.
Pleasure was all mine. Thanks, Jake. And thanks, everyone.